What's up, traders? Happy Wednesday. It's Chan, man. Hope you guys are getting better and enjoying your week. Let's dive right in, guys. As always, going to cover the market, and man, oh man, are the bulls turning the ship around. We got lots to talk about, and I want to share my few, probably top 3 setups with you guys for the rest of the week. So let's dive right in. As always, guys, right? We start with the overall market. We had that beautiful, just really step back a little bit. We had that big, beautiful breakout and reversal from our last little drop here back in September. We kind of topped out, finally sold off a little bit the past week or two, and we did a really good job of bottoming. I laid out a few inflection points personally that I was watching, and one of the bigger ones was this 50-day simple right around this key range. This is an indicator that if you just look at a daily chart here, we've pretty much held, guys, all this year, right? Obviously, we can slip through it a little bit. That goes for any key level or, any indicator, but typically we find our feet around it and really good support comes in. That's at least the case for this year. You can see just how many times it's hit it. Only recently did we actually, break through it and, kind of chop around it. So when we had, the drop down towards it, I was also focusing on this key level of 45, 49 and a half, right? That's that prior all-time high. If you guys know how I chart, right, to me, that's a really big inflection point, right? So to see the market, guys, turn into bearish mode, that didn't surprise me. We had a little bit of, virus news, and every time that we popped to the mean, it was just a beautiful short. But as you guys know, my trading style is if this, then that. And we simply just kept holding up, right? So the scenario becomes if we hold up, we can begin to reverse. And it really starts by getting back above that daily 21, which we did beautifully yesterday. And we had a nice, decent day today. I'm actually happy we took a little bit of a day off. We'll cover that here in a minute. But long story short, guys, right? Pretty good dip buy. And again, there's no reason to panic. If you zoom out, we were right near all-time highs. Very, very healthy market. So this was a pretty solid pullback to the 50-day simple. We also dropped right around the daily cloud, another pullback tool that I love. And another thing here, guys, is we dropped down towards the weekly mean, right? Something that also has happened quite a bit this year. And every time it happens, it can be a really nice dip buy, a really nice dip buy. We don't get it too often. So when we do, excuse me, when we do get it, guys, right, it's a nice, healthy reset for a very, very strong market. And again, with all the virus news popping up, the market is a little bit conditioned for it already. So maybe it's, the Fed's comments that would bring it lower. But as of now, and again, it's always day by day, we've had a nice drop, a stunning reversal. And again, if we just keep it simple here, we are right back to where this drop started, right? 47.17. So very simple zone here of all-time high and the level where this move technically started, that 47.17. So obviously, guys, there's 2 ways, or 3 ways rather, that's going to happen at this key level, right? We've ran pretty strong to it. One scenario is we just keep going, right? The market has done that plenty this year where it reverses and doesn't stop. Look, a few weeks ago, it did exactly that same thing. And it's not the first time this year, right? We dip, reverse, and keep going. So that is one scenario, guys, right? Not sure the short interest data, but there's always at least some, bears to squeeze. And I think that's a reason of why we just keep ripping so hard. But again, we can rip right through these levels, guys, and, go take out psychology, which is about 4,800. Market has an ATR about 70 points. So, we have about 2 sessions left, just assuming 140 points. All right, we're getting to that 4,800 and higher. Really big levels here. If we take a look as well, we do a decent daily squeeze. One scenario, guys, is obviously we can't break these levels and we do head a little bit lower. And if we do head a little bit lower, it is going to give this squeeze a chance to get back on this tight compression. Well, right now, if you are familiar with the Squeeze Pro, it's on the black dot. So, kind of the loosest compression. And if you're used to Bollinger Bands, you can kind of see it's not super tight here, right? I really like when they're, technically tight, have that good compression. So again, if we do fail here, guys, I wouldn't mind a pullback. We'll really have to see, we do it with the Fed next week. So that might be on the table where we pull back into the end of week, kind of get through the Fed. Who knows? But if that does happen, it is going to lead to a very tight daily squeeze, which again, at that point, I won't mind it because if and when it makes up its mind, whether it breaks out their all-time high or breaks below that last little drop point, that's going to lead to a huge move. So could be a wait and see. And again, if we do pull back here, guys, looking for a reversion to the mean, right? Always about the 21 EMA when we're trying to decide, is the market bullish or bearish? And you can look here, that last little place that we dipped, rallied to, and then broke through, that's kind of lining up with the daily mean, as I make this video. Obviously going to move a little bit, but if we look, guys, just to draw a basic zone, focusing on that 46.25 to anywhere about, call it 46.50. That'd be a nice place for the market to pull back to and, really try to find its feet. And in all honesty, unless something, bad hits the headlines or the Fed said something, you can look to short this zone, guys, but in all reality, market is now bullish, right? Or above the mean. We want to focus on buying dips. You can short them if you'd like, much like if you're bearish and you want to play it up. You just need to be mindful that playing it up is a better short, right? So heading lower might set up a better dip by opportunity. Doesn't mean you can't short it, but I would definitely be a little patient on getting too aggressive shorting this market. So again, I think the paths, guys, are as follows. One, we just keep breaking out. We keep moving. Two is we pull back towards the mean. We kind of find our feet, get back in that daily squeeze, and then let the market really decide what happens next. And again, we do have the Federal Reserve here. Let me just pull up some internet and check real quick. Here we go. So again, if you've never seen this, I use marketwatch.com and their economic calendar. And if you just scroll down, we are working with the 8th right now. So again, we don't really have anything this week. Looking into next week, we do have, guys, right there it is, our FOMC and our J Powell conference. So again, market might wait for those events, guys. And while I have you here, just want to talk about one more thing, which is a few events that are going to happen here in the end of December. So another thing, let me keep pulling up websites. SPX roll, here we go. So a few things happening, guys, again, just to have a really bigger picture thesis right now on the market, where if it does pull lower and squeeze, there are a few things just to discuss that I, want to put in the air and put to your head as a trader that we're going to have to deal with. And the first thing right now, and I'm actually glad we're having this conversation, the first thing right now is dealing with the SPX roll, right? This is when, every quarter, the big equity index options expire. And this is when big money, right, the people that trade these things, they have their opportunity to do what's called rolling it, right? So they sell what they have and they buy further out, if you're familiar with the concept. So you guys can see this happens every 3 months, right? Every quarter. We're on the 12th. You can see the roll date. I recommend saving this website. The roll date here is on the 8th. Today's the 8th. So today does start the SPX roll action. And this does lead you guys all the way into next week, right? All the way into the 16th, heading into Friday, where everything expires. So this is the first thing to understand when it comes to the overall market, right? And the reason that this is important is because we are going to see spurts where the market heads lower for a little bit, right? That's typical on SPX roll. Obviously, guys, anything's possible. We could just keep exploding. But it is very important to discuss that SPX roll is happening. And there can be spurts where we drop, 30, 50 points. So be very mindful of that. And again, if this happens, it puts us back into a squeeze, back into the mean, very, very healthy. And we just want to be aware of it, right? And if we take a look, as again, at this Nasdaq calendar, if we just zoom in here on December, you'll see again, getting through this week here, but the week of, the 13th to the 16th, that's really the most important here, wrapping up the end of year. Again, we started the roll and it's going to end next week. And if we take a look here, a few other things, we got the blue triangle. Hold on, I got blue light glasses to make sure these are the exact colors. Yep, all right, we got the blue triangle, right, guys? That's the Nasdaq rebalance. So we're going to see rebalancing happening in NQ and tech. And rebalance, guys, is simply when big money has to manage their portfolio and keep things at certain percentages. So to give example, if I bought Google and, we're up 30% on it, and, my role is to only hold, 15%, I would need to then sell 15% of Google. And for example, I might, buy something like a Roku that I might, be down on to rebalance that portfolio. So that's going to happen, guys, next week on the Nasdaq. And you also can see we're going to have it on the S&P index. So we got the double rebalance. We got the option expiration, right? It's essentially, guys, just the SPX roll ending. And we also have triple witching, right? A lot of fun stuff here. The expiry of the equity options and index options and futures. A lot of crap's going to expire. And this does potentially, guys, make for a choppy next week here. And again, we might explode, but if we do chop, understand these things are taking place. And again, more importantly, if that is happening, we're setting up, guys, quote unquote, call it a Santa rally, where if we just pull back, get tight in a squeeze, and then maybe when that stuff's over, we rip. Maybe we just rip. Maybe we absolutely implode from here. But those are scenarios, guys. It's always my job to come in here and lay out the only three things that can happen, right? We can rip, we can pull back, and then finally, guys, right? We can sit here and squeeze. And that's exactly what we did for today's session. Anytime that we move, we're eventually going to take a break. And today really was that day, thankfully. Starting to get a nice, beautiful red dot squeeze here in the hourly. And if we take a look, if we do stay flat enough here, this 2 hours is going to start to get nice and tight. All right, maybe lead us into Thursday and Friday. But as of right now, we have a beautiful hourly squeeze, and that is going to be my compass. Does this drive us higher through all-time high? Or does it drop us lower back towards these key levels that we discussed? Keep it simple, my friends. I can share a few extra levels with you to keep an eye on. Right, really dialing in on these POC levels. As always, guys, 46.73, 46.95. We pretty much just went from one to the other today. Always about, knowing where these levels are and why they're important. Got 47.11 as a key level that we kissed nicely this morning and kind of pulled back. That was really our signal that we were just going to chop. So ideally, guys, right, we keep holding 46.73. We fire the squeeze to 47.11. And then we got that shot at that 47.40, which again is all-time high. And I got a few extra levels here that you can mark in your chart to keep an eye on. But that, guys, is my long-winded thesis on the market. I hope it helps. We have a beautiful market right now. We've had some, great inflection points in play, reversions to weekly means, 50 MAs. Beautiful price action here, guys. This market is really offering just a ton of beautiful opportunity. Great short, great dip buy, and now we're setting up for the next great move. So I hope this analysis helps. And let's see, guys, we can take a quick glance at the other indexes. It really is very, very similar, where we bottomed hard. We're back where the move pretty much started, and we're also starting to squeeze here, right? If we look at tech, it's just like ES. It's going to start to work into a 2 hour, and it's currently already sitting in an hourly. If it can break, guys, through the 16.5 range, it's got a shot at all-time high here, right? First, got to take out this next one around 16.6, and then all-time high above. But if we look at a daily chart, right? Just like the market, guys, we got to start to prove ourselves. We're pushing ourselves back inside of a daily squeeze. If we do reject where this move started, we can head back down to the daily mean. And if we head back down to the daily mean, the squeeze gets tighter. Where if we just break through this key level, we're going to head to all-time high. So again, guys, very similar scenario. So just to save myself some oxygen, I'm going to wrap it up on NQ. And again, YM, guys, same crap. Bounce back to where it started. It can roll down, stay in a squeeze, or it can keep ripping. But all the markets really have very, very similar structures right now, very similar compasses. I am a little different, but same levels, guys. Keeps our job nice and easy. Take a look at VIX here. Can't talk about the markets without talking about VIX. We neared a very big key level here, guys, of 31. And usually that's where, the sell-offs typically end unless they get really, really crazy. So we took out that, 32 on Friday, and we ended up closing below it. And then we broke below 29 heading into this new week. We gap below 25 here on Tuesday. That's a big signal. And we spent today getting down towards our next key level of 20. I love it. Always lay out the levels and they pan out nicely. So the path from here, guys, is as follows. The market can pull back and can reject, just like we talked about, if VIX bounces off 20 and heads to 25. And if it gets to 25 and gets rejected, that's going to be a really good dip buy for the market. So remember that. If VIX bounces, market's going to pull back. If VIX stuffs 25, the pullback becomes viable. Vice versa, guys, if VIX just breaks through 25 and heads to 18, the market's going to keep rallying. Keep it that simple. So that being said, guys, obviously want to attack the market, focus on market plays. As always, the spiel, trade futures, SPX, ES, and QQQ, SPY, whatever product you choose. But the market is definitely in play right now. But I do want to share a few of my favorite setups. And one of them, as always, is Google. So if we take a look at Google, really start to get familiar, guys, with this cloud. All right. If you've listened to any of my videos, spent any time, listening to my analysis, you've heard about the daily cloud, the Ichimoku cloud. This year, Google's been amazing. Every time it gets near it, it just holds it. It starts at it and explodes. Gets to it again, holds it and explodes. Holds the bottom again, rips. Holds it again, rips. On this recent pullback, where do we go, guys? Right to the cloud. And I love this indicator because you are very aware that this level is here. The cloud projects, months in advance. So this was a target to the downside. This was a beautiful dip buy, and Google is quickly back to the races. If you guys have been keeping up my videos, we've really been waiting for it to break through this prior all-time high, right? At 29.25. That caused our last big pullback. We kind of, sold off through it and we couldn't get back above it. And much like the market, that was kind of as the daily 21. We were stuffing it. And finally gap is starting to go here. And again, this reminds me, guys, of the market, where not only did it hold the daily cloud, it held the 50-day simple, but it's also, holding a daily squeeze. And now it's putting itself at the top of it in a position to start to fire. So personally, guys, this is one of my favorite setups right now on the overall market. And the reason being is this stunning weekly squeeze is starting to form, right? Google has not offered a weekly squeeze since last October, right? And I'm talking, 2020 October. We have not had a single weekly squeeze. So as a Google trader, this gets me very, very excited. And it's a beautiful setup for a very strong tech stock. So we had that beautiful dip buy here. Awesome, awesome trades this week. And now, guys, it's really setting up for its next big leg. Again, it's going to be predicated on the market, or if it does need to head lower, it can head, guys, right back to that 29.25 and right back towards that daily 21, which kind of aligns here with your gap up level. So I'll actually, put it right there instead. So call that, 29.06 to 29.25. That's a beautiful dip buy zone. But if you don't get the dip buy, it's just going to keep exploding. And most likely, guys, go and get that all-time high. So if we hop in here, right, much like the market, you might have guessed what's next. We're starting to get some really stunning squeezes. So if I show you guys my drawing set that I'm working with here, we had a beautiful gap up, broke 29.15 and 29.25. And that was really the zone that Google needs to hold. And it did a really good job of holding here today and starting to put us inside of an hourly squeeze. Let's go. Next level, guys, is 29.73, or if Google can just continue to hold 29.50, even go lower, that's fine. As long as it continues to hold this range and break out through 29.73, we got 3K and we got all-time high on the way. I love Google right now. And especially, guys, right? One of my favorite setups is a bigger picture squeeze, like a weekly, and then getting, positioned on these intraday squeezes, because as they start to fire, it pushes that big setup to start to fire. And that's how you get positioned for a really, really great trade. So again, mark these levels down, guys. Has an ATR about 65 points. So from prior close, all-time high is only about 54 points away. If market pops and Google pops, it makes 100% sense that we can get all-time high. So if we peek at some options, guys, here on Google, right, really want to focus on 3000s right now. If these can dip, right, to around, let's see, anywhere around $2 to $3, anytime this week, whether it's Thursday or Friday, that's a really, really good strike. And that's a really good price point that I'd be interested in. Why'd that go away? Here we go. Oh, wait, where's the chain? There we go. So guys, really like the 3000s right now. I'd be careful going too far, but the 3020s are another really nice strike. And probably that's all I'd focus on. I wouldn't go too far out. We're heading into end of week here. Obviously, if you have a higher tolerance, even then, I don't recommend these strikes, but 29.80s if they get cheaper. So really, as the 3000s and the 3020s are your favorite strikes. These anywhere around $2 to $1, and 3000s anywhere around, of course, this is assuming you can get at that price. Ideally, guys, around 2 to 3. Those can be really, really good lottos that have the potential to push towards 20. So I hope that makes sense. Next up, guys, is Shopify. All right, very simply here, this is a name that took a very big dip, is making a nice pop, and I want to see if they continue. Shopify here, guys, drops to 200 and rips, drops to 200 and rips, drops to 200, and of course starts to rip. And right now they're wedging really nicely, holding the 50-day simple and rejecting the daily 21. Right, so you guys know the deal here. It can fail from here, but if it can get through the mean, that starts the journey of starting to rally higher, right? And right now with about a 78-point ATR, at least looking, guys, to get to this candle, that's only about 40 points. At the top of this range, you're looking at about an ATR. So really just call it 1600. So if we dive in, guys, and look at Shopify and, lay out some key levels here, reverting back to the mean is pretty much all it did, right? Held the 200 this week, gapped above the 50, and then kissed the mean. Today, kind of chopped around the mean, but continues to hold that 50-day simple. So really, guys, looking for the squeeze here, looking for a decent position in Shopify. I really like the hourly that's starting to form. Does have a 30-minute as well. Nice and tight. This is textbook for me. I really, really love these setups. So again, as long as it can hold, guys, 1484 and 1470, this is a valid trade. Accelerators through 1540. First target, 1560, 1580, and then again, that 1600 range. So with a 78-point ATR, 1600 is pretty much looking like the first target, guys. So if we look at shop, you might guess 1600s, guys, are my favorite strike. Let me get enough strikes here. All right, so these 1600s, guys, are loving them. Right around that $3 range, honestly. Even, anything cheaper, obviously. If it goes to $2, that's fine. But 2 to 3 on these options, really, really good lotto. Because if it does break out and fire the squeeze, those are going to work well towards 10 and 20. All right, so amazing risk reward. Let's see here. 50/50s are a little expensive heading into the end of week. Again, guys, if it does just sit here and chop, these 50/50s can get cheaper. But ideally, would like to see those get, cut in half, if anything. So really dialing in the 1600s. Shop's a name you don't want to play in and out of. You kind of want to buy less, size down, and, get a position and kind of hold it. Not always the best spread. So you want to just try to get an entry, guys, in something you're okay risking. And again, if the setup fires, it's going to go 3 to 20. If it doesn't, you can decide how much damage you want to take. But really, really love the setup. So again, as long as it can hold here, break out here, we can head here. Let's see what happens. Then one more setup for you guys is Roku. So Roku's been on the do not touch list for a very, very long time. And I'm actually curious how long, because it's felt like a lifetime. Been going straight down, guys, for 132 days. Crazy. Absolutely getting its butt kicked. For me personally, it was just an ignore, just getting beat up. And one of the headwinds, and I've discussed this for a little bit, one of the headwinds behind Roku being down so much was that they couldn't fix their partnership with Google. It got a little stained recently. That was part of their decline. And then Amazon came out, made a TV. It seemed like everything was just going against Roku. And then randomly 20 minutes before bell today, thank God, Roku and Google kind of fixed their relationship. You can see here, guys, that Roku signed an extension with Google to carry YouTube. This is really big news. They signed a multi-year deal. Analysts hail the Roku Google deal, see up to 119% upside. I don't know about you guys, but I think this is a really big catalyst, right? They ended their feud. Google is massive. YouTube is massive. And Roku really needs these types of partnerships, right? If the big guys are going to cut them out, it makes sense that their stock's going to get destroyed. But lo and behold, how, convenient, right? A big support here. The news hits. So this is stock, guys, that in my opinion has, I'd like to think nothing but upside at the moment. It's done nothing but go down. So even if it does fail, I don't know if I necessarily want to short it. It's been down so much. And again, I really like this news. So I'd like to see, guys, big picture, if they can start to run back towards this cloud, which, depending when this happens, it's going to get you anywhere up towards that 300 range. I like that. And again, guys, this is just a textbook bottom. It's been at, -3 ATR for a long time. Even on the weekly chart, -3 ATR. Upside is just really, really favored. So again, might be a good put credit spread candidate because it might not rip, but I don't really see it going lower. That's the most important thing. So look at a few things here, guys, on Roku. Here we go. So 391 is that daily mean, that daily 21, and that's pretty much where we got up to today and are starting to, move and groove through. If you take a look, guys, we do have a very, very small gap to fill. First is getting to the fill trigger, which is 264, and then filling that gap is going to be about 269-ish, right? And then I have 272 here, guys, which if you just look back, is this really big wick from right here, which I assume is going to cause some noise when we get to it. That's the math behind it. well, science behind inflection points. And then from there, guys, right, really keep an eye on the 50-day simple. We kind of have a, a little cluster here of price action. So nothing too definitive. You can call it 280. I like to see the 50 kind of get a little bit lower here the next day or two. And that's going to kind of line up around that 280 level. And therefore that can become a really nice target for Roku. This one, guys, I really have to see how the street feels about it. Today was a really good day, had a nice gap up, and then it went even higher, ending the day about 40 points, almost 20% move. Beast. But again, it hasn't been a beast, guys, for a long time. So really going to let the street decide if this is one that, they want to keep pumping. And if they do, I'm all for it. So again, some key levels, guys, to keep an eye on. We need to continue to hold, 239 and 247. So for some reason, it comes down to it. That could be a pretty solid dip buy. But in all reality, need to break 261. And then we got to start to take out the zone, right? From here to here is kind of the gap fill. And then to the 272 is a little bit extra. Obviously, guys, this thing can move really hard. The 50-day simple sits above here. And that's currently about, 30 points. Today, guys, Roku moved 40 points. So it is really hard to kind of assume where this thing could go. But just to give you two targets, right? One is that 50. So let's just call it, 285 here. All right, make it purple. At least I do. And then let's just call it 300, guys, right? For psychology. Really like those levels. So again, it can absolutely explode. Or it could fail, or it could go sideways. But ideally, guys, if it can just hang above the mean, we should see some accumulation of Roku if people care about the stock. It's been down so bad. And I just personally believe that this is a decent, positive catalyst. But at the end of the day, it ain't about what I think. It's about big money thinks. Today was a decent day. Should see a day two. So again, first target, guys, 272 and then 285. If it gets really giddy, mission 300 this week. If not, next. So that being said, guys, focusing on this week's and next, right now, I really like the 270s for this week, 280s at the furthest, and then even considering something like next week. Ideally, if we dip. Right now, the 300s are kind of a super lotto, and I'm really keeping an eye on something like the 280s or the 270s. If it can take a little bit of a dip, that would be ideal. So that's my thoughts, guys, on Roku, and that's my thoughts on the entire market, and really, to guide you to the rest of the week. So gave a lot in this video. Hope you guys enjoyed and found value and everything made sense. Again, go out there, kick butt, get a little bit better. Please like, comment, subscribe if you haven't already, and I'll talk to you guys in the next video. Trade well.
Hey, Focus Chan here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.